welcome. You are watching Property Hotline with me, Kavita Krishnan. Today, we will be answering all your questions related to home finance, how to finance that dream home, and yes, of course, all your questions on how demonetization, the crackdown on black money, could impact home loan interest rates. With me in the studio is Kartik Jhaveri. Kartik is the director of Transcend Consulting, India Private Limited. Kartik, welcome to the show.
Thank you.
I'm sure you're getting a lot of questions on what is going to happen to interest rates now. And I believe we also have quite a few of them. Let's get started. We have Satyan who sent in an email query now. He says that he's planning to buy a home that costs around 26 lakh rupees. He has an annual salary of 2.5 lakh rupees. How much loan is he eligible for? And yes, the question there, is demonetization going to affect the interest rate of the home loan?
Okay, so let's talk about demonetization first because that's the hottest topic at the moment. So demonetization will positively and definitely affect your home loan interest rates, and to your benefit, it's going to be positively biased. It's going to go downwards. So your interest rates are going to go down. The reason for that is quite simple. The banks have a lot of money. So because they have a lot of money, it is automatically an economic implication that the interest rates must go down. So there is a lot of technicality around it, but very simply put, because there is a lot of money that the bank has, therefore the bank is going to now charge you lesser because it has that much more money to lend out and do further business, very simply put. So your home loan interest rates are going down. You're going to save a lot of money in your EMIs. Talking about your EMI per se and the loan that you're going to be able to get. So now, to get a loan of, say, something in the range of about 1 crore, you'll need about 1 lakh or so as an EMI. Now, your house is going to be about 26 lakhs. That's what you're looking at. So, look at 1/4 of that. Now, why I spoke about 1 crore and 1 lakh is because of your income. Your income is 2.5 lakhs. So, based on a 2.5 lakh income, the maximum EMI you'll be able to pay will be somewhere in the range of 1 lakh to 1 lakh 25, which means you're eligible for a loan of 1 crore. So, which means if you want to buy a house of 26 lakhs, by all means that will be possible. But if you want to go even higher, it's perfectly okay. I'm hoping your circumstances are such that you don't have any other loan EMIs going on. But if they are, then of course that'll get adjusted to that extent. But otherwise, if you don't have any other loans going on, you can go all the way up to 1 crore if you wish.
He says the salary, he has an annual salary of 2.5 lakh rupees.
Oh, I'm so sorry. My apologies then. So if the annual salary is that much, then, we assume your monthly salary to be about 20,000 rupees, and which means your loan factor should be somewhere in the range of about 10 to 12 lakh rupees. And because your loan is going to be in that range, therefore, you will have to fund the 12 to 14 lakhs out of your 26 lakhs that you are purchasing on your own, which means you'll have to have your own internal resources, savings, friendly loans, etc. So your loan should be somewhere in the range of about 10 to 12 lakhs.
And in any case, Satyan, you will not get the entire 100% funded from the bank. No bank will give you 26 lakh rupees as home loan if the home costs 26 lakh rupees. You are expected to fund at least 20% of that. 80% is what the bank will typically loan you. And as far as interest rates are concerned, like Kartik just told you, interest rates on loans are expected to go down. In fact, we already have a couple of banks who had cut MCLR the week earlier, the week before, and this week we saw a lot of banks cut deposit rates. So if your interest rates on home loans are coming off, it is also going to pinch you because your fixed deposit, the interest that you'll get on your fixed deposits, on your recurring deposits, all of that is also going to reduce, and that is something that you need to keep in mind if you're planning your investments. We have Rohan who sent in a question again on email. He says that in order to avail a home loan and its benefits, should he buy a ready-to-move-in property or a property where possession is expected by the next year? What will be the effect on home loans after demonetization? We've already discussed that, and
Absolutely.
You can see the interest rates on your screen. We are constantly putting that up for you. What should he do? Will the tax benefit actually differ on the basis of what stage the house is in?
The answer is both yes and no. The reason is yes, you'll get all the benefits, except that we don't know what's the figure that he's thinking about and what's the quantum of loan that he wants, and how much is the space and provision available in his section ADC. So now what happens is if you buy an under construction property, all the benefits that you have are accumulated, and then they have to be subsequently distributed in the next 5 years once you get your possession. If you get your possession right now, or that is to say that if you buy a ready property wherein you can move in straight away, your possession is with you, then automatically your entire EMI will start getting paid and you will get the benefit for the entire quantum of interest and principal that you're paying. Principal obviously to the extent of 1,50,000 as part of your ATC, and then interest benefit up to the extent of 2,50,000. So that entire benefit you'll be able to carry in. But if it's under construction, then it will have to be accumulated and the benefit will happen a little later. So it all depends on what your exact situation is and what's the quantum of the housing finance that you're looking at and the construction finance that you're looking at.
And of course, the key thing that you need to remember here is whatever tax exemption that you choose to avail on the home loan repayment, you can only do that once you get the possession of the house. And by possession, we mean that you need to get the OC for that home, the occupancy certificate for that particular home if it's a flat. And while on interest rates, you can see the MCLRs of different banks and of course the rates at which housing finance companies are lending. We do have a credit policy that is coming up, Kartik. Are you expecting any relaxation in the repo rate over there?
I think so, because banks are at the moment flush with liquidity. And the RBI governor did say that, we want to increase the CRR rate at the moment. So I think somewhere if there is a little bit of a relief there, then that will send out a lot of positive signals to the economy. I'm not sure whether they will do it. Maybe they want to wait until the end of the year, which is the last date for the demonetization and the collection of all the old currency. So I'm not sure if they will do it this time, but I think I'm definitely looking forward to some sort of a rate cut, which is going to be great news all across and which is going to be the first, catalyst of positive growth in the quarters to come ahead.
Right, and the repo rate, in fact, is already at the lowest in a long, long time. It's at 6.5%. Repo rate is essentially the rate at which banks borrow from the RBI, which means money will become cheaper for banks, which in turn should ideally become cheaper for you. And that is why it is so important that we keep an eye on the repo rate, especially if you're a borrower in the home loan market. Right. We have Praveen who sent in a question now. Let's take his question. It's coming over email and he says that he wants to book a flat that he's getting in a pre-launch offer and avail a home loan on the flat. Now, he does not want to opt for pre-EMI. Praveen wants to know whether it's possible to start his EMI after getting possession and that if he could pay the interest and the principal amount together. Will the bank wait for Praveen to get possession to take EMI?
Oh, absolutely not, Praveen. I mean, there will be a payment which will have to start. So there's no question of you having any sort of moratorium, if I've understood his question rightly. So there is no empty period or there is no vacant period or there is no relief on interest or anything of that sort. So the thing is, most of the situations you have two choices. If you are okay with paying the EMI, then start paying it. If your financial situation allows you to do that, I would suggest go ahead and start doing it anyways. Right? Because by doing so, if you have, for example, got a disbursement of 10 lakhs and if your EMI is, say, for example, 40,000 and out of the 40,000, again, for example, say if your interest is 10,000 rupees, then that 30,000, get into the habit of starting to reduce your principal straight away. So by the time you actually come to your possession, you'd figure that most of your or a good part of your principal is already repaid. So why not do that? If you can afford it, by all means do that. You, however, have the option that is to say that if you want to invest your money elsewhere, then for whatever amount is disbursed, you need to pay at least the interest, which is known as the pre-EMI interest. So you can continue to pay that interest rate going on and continue your loan, take the disbursement as you need. But somewhere I feel if you actually started paying the EMI, it might be better off for you.
Right. So it's better off that you start paying the entire EMI, which means principal plus the interest from day one, and not really wait to get possession and then start paying your principal. You pay off your home loan faster that way, and you end up paying less money as interest.
Indeed.
We have Kartik who sent in a question over email now. He says that he and his wife both are government employees. They've taken a joint home loan. Right. Now, while applying for an income tax exemption, only Kartik applied. Can they both now apply for exemption? If yes, in what proportion? Will demonetization have any effect on this? I don't think demonetization has got anything to do with the IT exemption that you're getting on your home loan. What about the rest, Kartik? How can they move to both of them claiming the tax benefit on the home loan?
Yeah, so let's answer the previous question. Can they both get the tax benefit? The answer is absolutely yes. They've taken a joint loan and the bank has approved, or the financier has approved the joint loan, which is very easily to assume that they jointly own the property as well, because that's the part of the information which we don't have. So They own the property jointly. They've applied for a joint loan. Only one person has claimed his exemption. It's perfectly okay. The second partner, the person, the spouse who has not claimed that exemption can do so by filing the return. If the return is filed within, and if you're within the time period allowed, file a revised return, and that way you can also claim the exemption. Also, for the benefit of everyone else, if one partner is paying and is managing the entire EMI, so to say, the other partner can still take the benefit if the other partner has some amount of income coming in. It would be like a deemed gift from the husband to wife, and that benefit also could be taken, which is perfectly okay. Will demonetization have an effect? See, per se, it will not have any effect on your tax exemptions. However, as a slightly long prediction, if you may, and this is my own prediction, that if there is a lot of money that comes into the system, what will actually happen in months and years to come is, because the country will be on a much better sort of a financial footing, maybe your tax exemptions itself might expand. So if you like, it might have an indirect effect of sorts. These home loan exemptions that you have might expand, or the tax slab itself that you are in, that might expand, because the government has a lot of money. In fact, the direct tax collection is pretty much taken care of for the whole year by this return of this old currency. So already the government is flush with funds, so you might have some sort of a benefit.
That's what you're hoping for from the budget, Kartik.
Yes, I'm scared out of the bag. Maybe we are hoping for that as time comes along.
Right, but coming back to the question that Kartikeyan had about both the husband and the wife actually claiming IT exemption, could you take us through the process? Because I understand that it is essential for both their names to be on the agreement for purchase of the home as well?
Indeed, yeah. So because they have taken a joint loan, and a joint loan is obviously only approved if the property is jointly owned. So therefore, we are making an assumption here that their agreement has both their names. And most agreements do not have a clear-cut specified clause which says that the husband has 30% or the wife has 70%, or which it's just two names. And when you have two names, it is automatically understood that each one has 50% share. So therefore, the proportion in which you will claim the benefit will also be equal, which is 50% each. Unless sometimes there are agreements in which this proportion is very well specified. Sometimes if it's an agreement for purchase of property and two brothers are buying it, or maybe two friends are buying, or two unknown, in some sort, two known parties are buying, but they are unknown to the extent that they are not directly blood relatives or something of that sort. So in that situations, many a times the property agreement itself has a definition that, Mr. A or party A has 30% share and party B has got 40% and party C has got 30%. Then in that case, you can only claim benefits out of the EMI in those proportions in your income tax returns.
Right. And also the other thing that you said that, you can refile the last year's return if you're the only one. Now say that they do not want to do that. They just want to start claiming benefits as a couple from this year on. Is that possible?
Yeah, that's perfectly okay. This is just a provision in law where you have the facility to revise your return if you have, for example, made some error in filing, or if you had to claim this exemption and you could not claim it. But all this is given the condition that you filed your original return in good time, that you are not already late in filing your original return, because there are certain rules which say that if you are late in filing your return, then you may not be able to file a revised return. But if you file it in good time, then you have it does happen sometimes that, you made an error, you want to make an amendment, or, you want to.
And does his wife also need to show that there is money going from her account towards payment of the home loan EMI?
Not necessarily. That's exactly my point. What happens many a times is they could be, husband and wife, many a times they have this arrangement that one person takes care of the EMI and the other person takes care of the other household expenditure.
Yeah.
But then the fact is that when they actually bought the house, both of them had contributed in some sense to the down payment, and both of them are actually in some sense also contributing to the running of the family and the household, which is why it's perfectly okay if the wife also claims this benefit, because any gift from a husband to a wife or wife to husband is free of tax. You can give the money. So it is like saying that the husband gave the money to the wife, and then the wife also paid a part of the EMI. And instead of that, the husband just made a payment single-handedly from his account as a matter of convenience. So the wife can have all the benefit, or the spouse who has not claimed the benefit is, if the spouse is a holder of the property, is a joint holder of the property, and has got a loan jointly, then this is possible.
Right, Kartik, and hope that answers all your questions to do with getting tax exemptions on the home loan, on a joint home loan. And in fact, the reason we spend so much time is so that it answers questions that all of those out there who want to take a joint home loan have in their mind. Let's move on to a query that Praveen has sent in. Right. Now, Praveen says that he's already taken a home loan. Correct. And he is availing income tax returns for that. Now, he wants to take another home loan for another house.
That's right.
Can he avail income tax returns for that as well?
Yes, he can avail the benefits of the income tax from his other property. What will happen is his second property will become a let-out property or a deemed let-out property, depending on whether he's actually letting it out or not. So the first property then becomes his self-occupied property, on which he's going to get the standard benefits of 1,50,000 ADC and up to 2,50,000 on interest. The other property, he will have to report the rental income that he's getting from that, even if whether he's getting or not getting is a secondary matter. If he's not getting, then it will be a valuation base, which is known as the fair value rental, which a property of that stature can expect to earn. So he will have to report that as his income, and then whatever interest he is paying, it is not restricted to the 2,50,000 cap. If he is paying 3 lakhs or 4 lakhs or 5 lakhs on that property, the entire thing could be then carried forward as a loss in his income tax return, and by which he can actually save a lot of taxes, because some other income that he is earning will get reduced to the extent of this interest payment that he's making. So it's quite an interesting option for people.
But also, Kartik, if he's reporting this notional income without actually having given that property on rent,
that's right.
If he's saying that I am earning this much rent from this property,
correct,
and availing exemption on that, it also means that he's adding to his income. In that case, does he need to pay income tax on this notional rent that he is supposedly earning from that property?
Yeah, technically the answer to your question is yes. So he's going to report that as income. He will get a 30% standard deduction. So for example, the 100 rupees of the rental that comes in, 30 rupees of that will be deducted, and therefore 70 rupees will become his income. But against that income of 70 rupees, he might be paying an interest of say 120 rupees. So it's 70 rupees of income minus 120 rupees of expenditure or income for that. So actually he's got a minus 50 or a loss that he's made from that property. Now that minus 50 can then be adjusted from his income from salary or business or some other income, and he'll actually end up saving a little bit of tax. So yes, you have to offer your income as actually the income that you're earning, but against that you will also get this benefit. Now this is in a situation where you've not rented out your property, but assuming that he's actually rented out his property and he's actually earning 500 rupees as a rental income, then the entire mathematics would change. Then of course he's really earning money, and therefore he will actually have to pay tax, and there's not going to be any recourse out of that.
But even then, considering the kind of rentals that we get for residential property in India and the kind of EMIs that you're actually paying, because the capital values are way, way higher, it generally balances out, and you're actually you're gaining rather than losing because of these tax exemptions, right?
Indeed, absolutely. Most of the times that's what happens.
So there you go. It actually, from the tax point of view, from the tax perspective, it is actually quite prudent to have another home loan running. Of course, you need to be able to afford that. We have a question from Hemant now. He says that he bought a flat for 77 lakh rupees. Now he wants to pay 30.5 lakh rupees in cash and the remaining by loan. He wants to know which bank should he go for. All these days he thought that banks would reduce interest rates. Should he wait or should he go for it? His salary is 45,000 rupees per month and his brother is earning half of that. It will be a joint loan account.
Absolutely. I think, you're in a very sweet spot, so to say. So go ahead and do it, because in some sense, real estate market is in a kind of a freeze. Freeze because a lot of deals are not happening, or there's not so much of activity that we are seeing. Suddenly, the cash is out of the system. And because cash is out of the system, suddenly the property prices seem to have technically corrected. Whether they have actually corrected or not, that we will only know when deals start happening in a particular locality. But we don't really see a lot of that happening. So my sense is, if you have to buy a property, just go ahead. It might be the best time to negotiate a good price, so on and so forth. So even if you have to get a loan on it, naturally you will save money in terms of interest, because your overall property cost itself might be, at least I'm thinking, 5 or 10% lower than the market rate. And if somebody does want to sell their property, then you are in for a great bargain. So I don't think there is any reason why you should be waiting. The question of a joint loan account and applying together and all of that, I would suggest is a matter of the bank's discretion or the financier's discretion. So go ahead and start the process. Banks will give you a sanction letter even if you have not identified the property, because in that sense, what happens is how much money is available via that sanction letter. So you have already in your case said that you want a 77 lakh property. and that you're going to pay about approximately 30 lakhs out of that for yourself. So whether you're getting a 47 lakh loan or a 45 lakh loan or a 40 lakh loan or even a 75 lakh loan, depending on your joint income put together, which you say is 45,000, but why not apply for it right away and try for it?
Right. There's this other thing that he says. He says all these days he thought banks would reduce interest
That's
rates.
right.
Should he wait? Should he go for it? And this is something that a lot of viewers have been asking us over the past few days. Obviously they are wary of getting stuck at a particular rate when rates are actually looking like they're going to go down and keep going down for some time now. What would you recommend to a person at this point in time if you have just taken a home loan or if you're planning to take a home loan? How can you ensure that you are on the right side of the interest rates when they actually start going down?
So, see, what is happening is most of the loans today are all directly connected with the MCLR system. So, which means whichever bank you go and take your loan with, automatically you're going to be in the MCLR system, and as soon as the interest rate is deducted there, automatically the benefit will be transformed to you.
But is that really what is happening? Because MCLR, from what we understand, is either reset on a 3-month, on a quarterly
Correct.
basis,
Absolutely.
or on an annual basis.
Correct.
In annual basis, in the case of some banks, which means that if I take a home loan today and say interest rates go off by another say 10 or 0.10 or 0.25% over the next few months, I'll have to wait for 1 year for it to actually get reset.
No, so generally speaking, that's not very competitive. So there would be very few who would even do that. But most banks would do it on a monthly basis or a quarterly. Quarterly sounds like most likelihood in terms of a scenario, because MCLR itself is a formula which the banks are finding it a little difficult to sort of manage and give you the benefit of those rates. But those rates have to come down to you. And like we've always said, you need to be a little aware about what's happening on your loan. Once you take a loan, A, you're not married to it, and B, you have to monitor it in terms of the interest rate that you're paying. So whenever you take a loan, whether you've already taken a loan, just watch your rate. And as soon as the interest rate for MCLR goes down, and by the way, this is public information. So this is already published on the website of the bank that you're working with. And you have a sanction letter in your hand which says that your loan is going to be at 1% lesser than MCLR or 2% lesser than MCLR, or, in some sort of a formula or a linkage with MCLR. So it should not be so difficult to exactly, monitor and figure out how your loan is going on. So you should do it. If the bank hasn't done that, you can always call up the bank, call up your relationship manager and ask them to make an adjustment. And if it just doesn't happen or things don't work out, you always have the right to move your loan to another place. Typically, you need to hang around for 6 months when you take a home loan with a particular lender. And once your 6 months are over, then you're free to move your loan to another lender. You can refinance your loan.
Also, a lot of people, even now, are still stuck with home loans that were given on base rates.
Correct.
They've not really made the switch to MCLR.
That's right.
What can they do?
So they've got 2-3 options. Either they refinance the loan and go to another bank and get into the new system, or they can remain in the same bank, and those banks or those institutions will ordinarily charge them a certain fee. And the fee is not very high, but that also depends, because it's a small percentage. But that percentage multiplied by your outstanding principal could become big or small, depending on how much is your outstanding principal. So typically they would charge you 0.25% to 0.5%, and in some cases a little more than 0.5% as well. So now all these things are possible. So first, it's always nice to try with the lender that you are with, so that what happens is there's continuity of relationship, then there is lesser paperwork and lesser hassle for you. But if that's not going to work, then you rather shift to another bank and then get into an MCLR system with a new bank if you're stuck on the base rate system. See, even the base rates are not stuck in totality in that sense. So even in the base rate, there is a formula. So now that we have gone to the MCLR does not mean that the base rate system has been scrapped. The base rates are still there and they are still published. It's just a different calculation mechanism. So if you're on the base rate loan, and then if there is a formula on the base rate, just check whether your bank is giving you the benefit of the base rate minus or plus whatever is your home loan rate.
Right, and you do need to also remember that it's the banks that have MCLR pricing for home loans or base rate pricing. If you are with an HFC, that's a home finance company, in that case, then you are on an RPLR system, which is completely different. So you need to have that, you need to get that distinction.
Correct.
Keep that in mind when you actually go on for this. But net, what you do need to remember, like Kartik rightly put it, you're not married to that home loan. You have to manage that home loan and ensure you get the best deal of it. We have a Twitter query now from Harish Chandra. Harish tweets saying that he's switching his home loan to HDFC, and he has been asked to pay 0.5% for memorandum of deposit. What is this? Is this mandatory?
Okay, so my sense is that he has to pay this 0.5%, and that's actually for the mortgage agreement that he would be doing. So, memorandum of deposit sounds like something completely different, but I'm thinking that he's referring to the same thing, that, you have to deposit your title deeds with the bank or with the NBFC. Now, if he's moving to HDFC, it's a non-banking financial corporation. And in that scenario also, he would be putting his papers as a collateral. It's called an equitable mortgage. You're depositing your title deeds. And like any other bank or an NBFC, you will have a loan agreement. So in that loan agreement, you need to have a certain amount of stamp duty. So that is one factor. In case if he has mixed up two facts, then it could also be that, this 0.5 could be a processing fee, because HDFC as an NBFC also levies this as a fee. Sometimes to a lot of people. So if you're salaried, the fee percentage is different, and if you are self-employed, the fee is different. And for a self-employed person, the fee is normally a little higher than what a salaried person would pay, and sometimes significantly higher.
But Kartik, very, very quickly, if you are switching loans from one bank to another bank,
yes,
what are the charges that you need to pay?
So typically you will have to pay processing fees, and you will have to pay the charges, which are the stamp duty charges for your mortgage agreement, and which is, I think, 0.02% of the loan that you're actually moving or refinancing. So it's not a huge amount of money, but it can become a sum.
Right. But you do not need to pay any prepayment charges. You need to keep that in mind. No bank
Absolutely,
can levy
correct.
a prepayment charge. What about HFCs?
Yeah, so that's a very clear-cut mandate from RBI that there is absolutely no prepayment that you have to make if you are from your own internal resources, if you are paying. If you are, however, getting it refinanced, then there might be a charge. But, most often we don't hear of these charges anymore. So prepayments are pretty much gone in some sense. But then there's no reason why somebody can't charge you that.
Right. With that, we do come to an end of this episode of Property Hotline. Kartik, thank you very much for coming in and answering all those questions. And we will, of course, help you with answers to every question related to real estate that you have, whether it is buying, selling, investing, legal issues, home finance like we answered today, or taxes and real estate. We are still answering all your questions related to the impact that demonetization could have. So pick up that phone, call us, write in, or personally tweet to me. I'll get you your answers from the country's biggest experts. Thank you for watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.